Hey, good morning, everybody. Today is Thursday, June 23rd, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning as we generally do with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. I want to do something a little different this morning. Let's start by looking at what sectors are showing the most strength as measured by the 100 most powerful stocks and the most powerful industry groups. Yesterday, the most powerful sector was consumer products, followed by real estate investment trust, oil and gas and coal, medical equipment, and rounding out the top five, we had healthcare facilities. I think it's interesting that consumer products and real estate are the top two sectors. These are very defensive sectors and indicate a hesitancy in the market by the professional money managers that really drive the market. Okay, now let's look at the industry groups. Yesterday, of the 100 most powerful stocks and the most powerful industry groups, 8 came from the real estate investment trust industry. 8 from household products, 7 from midstream oil and gas, 7 from precious metal mining, and rounding out the top 5, we had healthcare supplies with 5 stocks in the 100 most powerful stocks and the most powerful industry groups. These might be good places to look for leadership in this market. Let's take a quick look at the Russell 2000. Yesterday, after attempting a higher open, the Russell 2000 closed right at the bottom of its daily trading range. Bulls obviously would prefer to see it close at the top of its daily trading range. The Russell is down 4.9 points, or about 0.42%. Notice how the Russell continues to trade in this very tight range between resistance up here in the in the 1156 area, and support down here in the 1140 range. It'll be important to see which direction the market breaks out of that short-term consolidation. The bulls would hope that we break out to the upside. The bears would hope that we break out to the downside. Let's see what the NASDAQ Composite's up to. But before we do that, stocks reversed early gains to close down yesterday. Trading volume on the New York Stock Exchange and the NASDAQ was below average and below the prior day, so our distribution count remained unchanged. This is interesting because all of the rest of the indices we follow, the mid-cap S&P 400, small-cap S&P 600, the IBD 50, and the IBD 8585, all notched distribution days yesterday. Indexes closed near the bottom of their daily trading ranges, which is less than bullish. Our distribution count held steady at 3 days on the NASDAQ and 2 for the S&P 500. Investors.com has a slightly higher distribution count, with the NASDAQ showing 3 and the S&P 500 indicating 4 days. The Investors.com outlook for the market is an uptrend under pressure. Our market timing model is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. In order for a buy signal to graduate to our most aggressive margin signal, more stocks in the S&P Composite 1500 have to be trading above their 9-day moving average than the number trading above their 50-day lines. We're not there yet. It was interesting to note, however, that over the past couple of days, the number of S&P 500 stocks trading above their 9-day has exceeded the number trading above their 50-day. Take it for what it's worth, but I would interpret that as a bullish indication. Wednesday, declining issues topped advancers by nearly 3-2. New highs continued to better new lows. According to our Ramosi ratio, large capitalization stocks bettered small, but small caps cling to a slight edge on a 10-day moving average basis. Bulls prefer to see small caps outperform. The short-term McClellan oscillator fell back into bearish territory again yesterday, but remains one solid up day away from turning bullish. Wilder's directional movement indicator remains on a sell signal. From a market perspective, both the S&P and the NASDAQ have recaptured support at key moving averages. Our margin timing model is on a buy signal, while our distribution count is less of a concern. It appears that this market's trying to put in a short-term bottom. From the bull's perspective, it's important that we hold the mid-May support for the NASDAQ. That would be in the 46.78 area, for the S&P 2044. But more immediately, we need to hold moving average support. In the meantime, traders should be cautious and keep their stops in place and current. Okay, yesterday, the NASDAQ composite was down 10.44 points, or 0.22%. We closed at 48.33, and for the 7th day out of the past 8 sessions, we closed between our 50-day moving average and our 200-day moving average. This is indicating that the professional traders that move the market are hesitant at this point. I would say whichever direction the NASDAQ composite breaks out is going to be the immediate direction of the market going forward, whether we break above the 50-day moving average or we break below the 200-day moving average. Yesterday, trading volume was lower than the prior day and below average for you followers of William O'Neill. We are in an uptrend under pressure in the market since February, and right now we have only 3 distribution days. That's a fairly benign distribution count. Our market timing model on the NASDAQ is currently indicating a buy signal on the market, which indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. As noted earlier, the S&P appears to be bracketed between support at its 200-day moving average and resistance at its 50-day moving average. This is very, very short-term support and resistance. We have more significant support down here in the 46.75 area and resistance up here in the 49.69 range. Let's take a look at the S&P 500. Yesterday, the S&P closed down 3.45 points, or 0.17%. We closed at 2085. Notice how the S&P, like the NASDAQ, opened higher but closed at the very bottom of its daily trading range. The bulls would obviously prefer to see it close at the top of its trading range. The S&P held support at its 50-day moving average. I think that's a critical area, and we'll see if we can continue to hold that area of support. Trading volume yesterday was below the prior day and below average. The S&P is indicating an uptrend under pressure and has been in an uptrend since February 18th. Has 2 distribution days. That's pretty good distribution count for this point in a bull market. Our market timing model on the S&P is indicating a buy signal, and right now the S&P appears to be bracketed by support down here in the 2044 area and resistance up here in the 2116 range. Before we go, I want to take a look at some possible swing trades setting up today. A note about swing trading. In swing trading, we're looking for a much shorter term setup than with CanSlim. If you've not mastered the discipline necessary to successfully trade CanSlim, please don't attempt swing trading. In swing trading, it's critically important that we trade in the direction of the short-term market as defined by the relationship between the NASDAQ composite and its 5 and 10-day moving averages. We're going to trade 3 basic setups: short-term consolidations, flags, and bounces. These setups can be as short as 5 days. Our targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to your written rule set. So let's get started. First stock I want to take a look at is TSC. TSC is putting in this short-term consolidation base with a pivot up here in the 49.72 area. As TSC approaches that 49.72 area, we're going to enter a buy stop limit order at 49.72. What a buy stop limit does is when the stock trades at 49.72 or higher, the order then becomes a limit order at 49.72, which indicates that we're not going to pay any more than 49.72 and we could possibly pay less. Next we have CNNX, which is also putting in a consolidation base, a short-term consolidation base, with a buy stop limit at $17.78. MDVN is setting up a bounce trade here. Notice how it's pulling back to its 50-day moving average. We're going to look for the stock to bounce off of that 50-day moving average. We'll either buy it near the close on the day that it puts in a significant bounce on higher volume, or the following day when it breaks the high of the bounce day. And the last stock we want to take a look at is IBP. IBP also is putting in this consolidation base with a buy stop limit at 35.59. Just a reminder before we go, swing trading requires extreme discipline. Again, these trades may be of interest to aggressive traders with a written rule set. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.